Is the dollar's reign coming to an end? The trade war between the United States and China has evolved far beyond a simple economic rivalry. It has become a financial earthquake, sending shockwaves across the global economy. This isn't just a battle between two superpowers. It may very well signal the beginning of a global economic reset. In recent months, China has begun offloading U.S. Treasury bonds, key financial instruments that the U.S. government relies on to fund its operations through international borrowing. Since June 2023, China has sold $13 billion worth of these bonds. At one point, China held as much as $1.3 trillion in U.S. debt. That figure has now dropped to below $800 billion. Put simply, China is no longer willing to lend to the U.S., and more than that, it's actively reducing its existing holdings. One major reason behind this move is the rising interest rates in the U.S., which are eroding the value of older bonds and causing China to take consistent losses. But there's a deeper, more strategic motive at play. China understands that by selling large volumes of U.S. bonds, it could destabilize American financial markets. A sudden sell-off could trigger a severe shock to the U.S. economy, and perhaps that's the real intention, to shake America's economic foundation without firing a single shot. America's economic system, a ticking time bomb? The foundation of the American economy rests on a system that is both simple and dangerously unsustainable. It consistently spends more than it earns. To bridge this ever-growing gap, the U.S. turns to the world for loans, primarily through the sale of Treasury bonds. Every year, the U.S. government requires hundreds of billions of dollars to fund public spending, infrastructure projects, and social welfare programs, and much of this funding comes from international investors. But here's the big question. What happens if countries like China, Japan, and other major bondholders stop buying U.S. debt? Where will America get the money? Currently, the U.S. is already burdened with over $34 trillion in national debt, a figure that continues to climb each day. Adding to the pressure, interest rates have surged, forcing the government to spend billions just to service the interest on that debt. In effect, the system is becoming a financial time bomb, one that, if triggered, could not only shake America's economy, but send shockwaves throughout the global financial system. Now let's talk about the broader strategy unfolding on the world stage, one that's directly challenging America's global economic dominance. De-dollarization is no longer just a buzzword, it's a deliberate and growing movement to reduce the world's dependence on the U.S. dollar. And at the forefront of this shift is China. Over the past decade, China has been methodically executing its de-dollarization plan. It began with Russia, where both nations agreed to conduct energy and defense deals in yuan instead of dollars. Since then, China has expanded this approach, pushing for trade agreements with countries like Iran, Brazil, Saudi Arabia, and the UAE to be conducted in yuan or local currencies, gradually steering global trade away from the dollar's grip. The decline of the dollar, a new era in global finance. The dominance of the U.S. dollar in global transactions is steadily eroding. According to the latest IMF data, the dollar's share in global foreign exchange reserves has fallen from 70% to just 58%. This isn't a minor shift, it's a strong signal that the dollar, once the undisputed symbol of global currency for the past century, is losing its grip on the world economy. China is accelerating this transition, not just through trade, but also via technology. The introduction of the digital yuan is a critical move in China's strategy to establish its currency as a true global alternative. By pushing for wider adoption of the yuan, China aims to reshape the global financial system in its favor. If the use of yuan, euro, and other currencies continues to expand in international trade, the U.S. will lose one of its most powerful tools: the ability to isolate nations from the financial system through mechanisms like swift bans or economic sanctions. The dollar-based financial system has long been America's strongest weapon. Now that weapon is weakening. De-dollarization isn't just an economic shift, it's a geopolitical transformation with the potential to redraw the balance of global power. And today, one question echoes through the strategic halls of major world capitals. What comes next? At the heart of China's grand vision lies a bold and far-reaching strategy, the Belt and Road Initiative, BRI. More than 150 countries have joined this project, enticed by massive infrastructure loans for roads, railways, ports, and energy. But these loans often come with strings attached. What appears to be development assistance often becomes a debt trap. Once these nations become financially dependent on China, the real terms emerge. Shift your trade to the yuan. As this shift happens, three major outcomes follow. Global demand for the dollar drops. The yuan's strength and influence grow. America's global dominance begins to erode. So, BRI isn't just about building roads, it's about remapping the world's financial order. The critical question: what happens next? If this trend continues at its current pace, global trust in U.S. Treasury bonds will keep eroding, and the dollar's dominance will slowly weaken. China is already pushing aggressively to establish the yuan as a viable alternative, and as the Belt and Road Initiative, BRI, and De-Dollarization efforts intensify, Beijing's campaign will only grow more assertive. On the other hand, America is unlikely to retreat without a fight. One possible move could be the introduction of a digital dollar, CBDC, a central bank digital currency designed to maintain the dollar's grip on global transactions. But there's a hidden danger here. Many prominent financial analysts warn that the next major financial crisis could erupt from within the dollar system itself. When a superpower's currency becomes unstable, the shockwaves ripple across the global economy, disrupting trade, investments, supply chains, and even daily life. This isn't just a battle between the US and China, it's a war over the future of the world's financial architecture. There was a time when the global economy moved at America's command, when the dollar spoke and the world listened. But now, the landscape is shifting. China has quietly executed a strategy that could turn America's greatest strength, the dollar's supremacy, into its biggest vulnerability. The sell-off of treasury bonds, the rise of yuan-denominated trade, and the global drift away from the dollar, these aren't random events. They're part of a deliberate, long-term strategy. The real question isn't whether the dollar is weakening, it's whether America truly grasps the game being played. And if it does it still have the right moves to stage a comeback? The financial world is watching closely. The stakes have never been higher. If you found this analysis insightful, don't forget to like and subscribe to stay updated with our latest content. The global financial landscape is shifting rapidly, and we'll keep you informed on the key developments. Thank you for watching, and we'll see you in the next update.